Hello, hello. Thank you for attending, everyone. Thank you for attending. This is another great presentation where I have with my uh, podcast partner on a weekly basis, Mr. Richard.advani from Supreme Lending, and he his company is a very fast-growing company. It's nationwide. He primarily help investors to get financing in all 56 really. He's based out in Southern California, and I'm based out of Northern California. But we help investors all over the country and to leverage their real estate wealth. And anyway, so Richard Vanny, before we go any further, the topic of this conversation is I'm just, for the lack of a better term, I think I've created a blueprint to buy a single family home investment, right? With the minimum down, it'll be I don't think anybody have discussed this type of strategy, but so without further ado, Richard, let's get this started. Now this is a now some of you are thinking, oh, I don't have enough down payment to buy my first rental property, or some investors, they're newbies, they don't want to take too much risk. And some investors, they want to buy a portfolio of homes. Some like to create a lot of cash flow. They don't really care about appreciation that much. They want to buy a portfolio of this type of homes with minimal down payment so they can achieve the monthly passive income that they desire when they retire in a few years from now. So whatever situation you're in, this presentation, this is a blueprint I'm going to share with you. Now, before Richard begin, as a matter of fact, Richard and his company has helped our investors for the past 4 or 5 years to finance these low purchase rental homes. And we believe he is the only lender who is willing to do a loan on such a low purchase price property, therefore allowing our investors to achieve much higher return than ordinarily possible, along with the great cash flow that they're getting. So this is a real life example, and we have this kind of property on a weekly basis on this particular market. But anyway, so we're able to do, and Richard's company can do this loan with only 15% down payment. I know most people thinking, oh, investors, you must put down at least 20%, and from 20 to 25%. Yes, that is true. But Richard Vanny, once again, he has this program where you can put 15% down payment on an investment loan to purchase such a low-end property. But we'll talk about it. You have to pay, mortgage, private mortgage insurance, which is very, very small amount, which is irrelevant really when it comes down to the cash flow analysis. So this property is a mere $50,500. It is a real property, but by the time we finish presenting, this property is already gone, purchased by some investor. But if you look at the numbers, which is truly amazing. I mean, for most properties of this types typically located in the Midwest. Okay, so just so you know what I mean by Midwest, right? Anyway, so it's very, very difficult initially to finance any kind of properties this low amount because most lenders are not willing to finance such a low loan limit, if you will, and because oftentimes it's not profitable, right, to these kind of small loans. But Richard will explain why it's profitable for his company. And not only that, in many Midwest market, on an investment home of this type, such a low price, you cannot get financing because the appraisal is broken. I mean, it's not appraised correctly in many markets, but in this market, it works, right? I mean, so I don't know how Richard Evans' company does it, but his lender are able to appraise a low purchase property. This is a minimal threshold. I mean, if you buy anything less than 50,000 purchase price on a rental property, Richard Evans' company cannot do this because his loan limit, as I understand, is 40,000. So if the minimum loan limit is 40,000, then I just calculated my analysis, and this is the minimal purchase price where you can buy something with financing with 15% down, although you can do 20% down, 25% down. You can buy with cash. A lot of people buy cash anyway on this type of small properties. But if you want to build a portfolio of homes, multiple homes, and you can leverage, only put down like 13 grand total, including closing costs, and get the cash flow, get the financing, and get the total return and the cash on cash return, the cap rate, all that nice numbers. And in a market where, where our turnkey provider here in Niagara Falls, able to, do everything for you, right? I mean, you don't pay for rehab costs. I mean, the property is already rented, right? It's already released. Is everything has been upgraded, and it's a pre-lease home. I mean, investors buy these homes, just like that. I mean, and it's being managed by in-house property management. They have the rehab team, they have a contract team, they have the whole service, full-blown one-stop shop for out-of-state investors. So enough said. So Richard, you have done many of these kind of loans on these kind of properties over the years. Tell me why what I've just said, my presentation is, in a way, kind of too good to be true. I mean, how can anybody buy a $50,000 property, cash flow so nicely at $237 per month? I even put down the maintenance projection, which is, 5% maintenance projection. I put down the vacancy rate. So these numbers are fairly realistic. So yeah, a lot of investors out there are simply does not think this kind of strategy is doable. But I'm telling you, we have done it many, many times over the past few years. Richard have done many loans. So just to show you, I mean, if you find the right strategy, if you find the right entity in the market, and if you can find the right team like us, myself and Richard and a few other members of our team that can help you to trigger on this kind of portfolio acquisition. I mean, imagine that, right? So enough said. Richard have a lot of things to say because you have so much experience doing this. So tell me from a big level why this is not too good to be true, why this is doable for out-of-state real estate investors. So go ahead, Richard.
Yeah, absolutely. So I don't know if you're aware either, but the first rental I bought 13 years ago was actually in upstate New York, in Buffalo, so right near Niagara, for probably 10 miles away from this example property you have. And yeah, I mean, believe it or not, people, there are opportunities out there in the market where you can buy in strategic markets that acquisition costs are still under $60,000, $70,000, in this case, even $50,000. And yes, we can absolutely provide financing on them as well, which is exceptional. As SeeWing mentioned, a lot of lenders won't go under $70,000 or $80,000. So you can buy a cash flowing property for just $12,000, $13,000, $14,000 in total investment, if not even less, which is obviously incredible. And as you can see, the numbers on this particular property are outstanding. Even if you set that maintenance reserve from 5% to 10% or 15%, I mean, you're still talking double-digit returns on the property. And it's a great property for a newer investor who maybe doesn't have as much capital. We deal with a lot of pretty qualified millennial home buyers that have a good credit, have a good income. However, saving $50,000, $60,000 for a property in Texas or in a different market may be impossible for them, or it may take 3 or 4 years and they really want to participate in the market. So properties like this are a great means for people to participate in the market, not need to have a crazy amount, obviously, in terms of down payment as well. And, also experience some growth, right? These properties, these areas, a lot of them are gentrifying. So there's going to be a lot of growth generally ahead of them as well. But yeah, overall, I think it's a good strategy. But as I always say, know what you're buying. These properties are going to have take a little more work and oversight than say, one of SeeWing's new construction properties in Texas that cost 250,000. So inherently, no, with obviously greater returns come a little more effort and work, right? You may experience a little more turnover on these properties. Of course, everything is still a 1-year lease, and it may be a little more maintenance than you would, of course, on a brand new home. But even factoring those in, and those things alone, they shouldn't scare you. It's just set the right reserves and run the numbers realistically up front, so that you're not surprised when minor maintenance items happen. But yeah, all in all, I've got a couple of these types of properties in my portfolio, and once again, the first property I ever bought when I was that demographic we're talking about, right? I was 20 years old, good income, but I didn't have $60,000 to put down on a more expensive home, so I entered the real estate investment game, if you can call it that, with a property just like this. So
Yeah, exactly, Richard. Now the big picture is in terms of acquisition portfolio strategy, in terms of exit strategy. Now, I mean, this type of property could be part of someone's portfolio, regardless whether you have a lot of money or not. Sometimes if you have a whole bunch of new construction property that in Texas or Florida that costs $300,000 and at 20% down, you only have like maybe $300 monthly cash flow. And if you want to, do some asset allocation and offset that with a high cash flow purchase in a Midwest market, such as this type of property, it will give you a high cash flow to offset the low cash flow. So that's how you diversify your portfolio over time. So everybody's situation is different. I know, like Richard said, I mean, some investors cannot take, the stress associated with dealing with the maintenance, although you're buying out of state remotely, although our turnkey provider will do everything for you. You don't have to talk to the tenant, you don't have to deal with the maintenance and upkeep, because this company will do everything for you long term. They've been doing it for many years, I think 30 years. This turnkey provider that's been promoting Niagara Falls and Buffalo. So, I mean, it's a family, it's a multi-generational family. The father, the children are all in a business. It's a family business. They have everything in-house, property management, everything. So it's almost passive. It's almost remotely. You just get your, mailbox money, if you will, on a every monthly basis, hopefully. So now let's talk about some exit strategies. I mean, like I said, I mean, you're cash flowing $240 per month already on a 15% down payment with a small, principal private mortgage insurance of like maybe $20, no big deal. So again, 13 grand out of pocket. Let's say you have $100,000 cash to create your portfolio, and you want to do financing. You want to buy this type of property. Look, how many properties can you buy with 100 grand total cash? You can buy approximately 7 of these properties, right? Just do the math, right? You're buying 7 of these properties with your total out of pocket 100 grand cash, and if you cash flow around 250 per month, 250 times 7, we're talking like almost $2,000 monthly passive income just right off the bat. And then some of you might want to pay down the mortgage, right? Use all your positive cash flow from all these properties to focus and pay down one house at a time, the mortgage, one principal per month, extra principal per month, and in 5 years or less, you can pay off this 30-year mortgage, this small little loan you're doing. So sort of a residual effect, pay down the principal, so you can pay off all your houses, mortgages in about 5 to 7 years. That you can live free and clear. It's that simple. So yeah, a lot of different ways to do some exit strategies, but pretty amazing, right? Think about it. I mean, this is real stuff. I mean, 13 grand out of pocket, and cash flow. I mean, look at the return up here, 10% cap rate and 1.3% rent to value ratio, 23% cash and cash return. And you might as well throw in 2 or 3% annual appreciation, maybe even more, because all the market is housing market is appreciating in the past couple of years, regardless of locations. I think that's pretty much it for this presentation. So the big picture is a newbie can do this turnkey out-of-state passive investment as long as you have a team that can help you do all the work for you, remote out-of-state passively. Doesn't matter where you live. In California, if you live in California, Vermont, or North Dakota, it does not matter. You know, this company, this type of investments are available for you easily, efficiently, and like I said, with mailbox money. So one final thought for you, Richard, I mean, on this type of strategy.
Yeah, just kind of as you hit earlier as well is, you know, these properties aren't only for new investors. We have a lot of clients who are very seasoned investors that have huge portfolios of these higher cash flow properties. And a lot of it depends on where you are kind of in your life and retirement cycle, right? If you're about to retire, you probably are more interested in cash flow than appreciation, as you may get, you know, in Florida or Texas or somewhere like that. And, you know, you need to replace an income that you had. And that's where we see obviously a lot of people buy these properties as well is, you know, when you need a tangible income to replace immediately with cash flow. Because, you know, you buy 5, 6, 8, 10 of these, which doesn't require a huge amount of investment. You're talking about some real money and some real income replacement. So, you know, and then lastly, of course, it's good to have a balanced portfolio like I do. Right. I have high cash flow properties. I have new construction appreciation properties. I have some multi-units in there as well. So it's a good idea to have a balanced portfolio and, you know, try out different types of properties and also, you know, blend your portfolio with a bunch of everything. That way, that really helps you weather kind of any market. So if you don't have properties like this in your portfolio, maybe a good time to add a couple.
Yep, makes sense. All right. Okay. Thank you, Richard. And with that in mind, this concludes this presentation about how to put the minimal down to leverage your investments to buy multiple properties for cash flow purposes. All right. Now let's segue into another topic, Richard. We can discuss about something that you do about mortgage financing. So, what topics which you like to educate investors on? About what you do. What's your?
Yeah, I think one thing we can touch base on today, I get a lot of questions on is, you know, assets, funds for the down payment, reserves, as well as, you know, just some tips and kind of strategies. So, you know, anytime you purchase a home or refinance, you need to have, of course, if you're purchasing the down payment and closing costs. And then you also need to have reserves, right? Reserves is basically money that you need to have in your bank account after closing to show that you have some liquidity in case of an emergency. So typically what a lender is going to ask for, of course, as you all know, is for 2 months of bank statements, right? And where things can get very cumbersome and aggravating for everyone involved is, you know, when you provide those 2 months of bank statements, what a lot of us do as consumers is, you know, we start moving all this money around to put all the money in that one account you plan on using. And it's very important to note that when you provide 2 months of an asset statements to your lender, the lender is going to go through those 2 months of asset statements and any deposits coming into those accounts, you know, over, let's say, a couple grand, any deposits coming into those accounts need to be sourced and explained because part of Fannie Mae and Freddie Mac mortgage rules are that we need to source and make sure all the money used for the down payment is your own. If not, we need a gift letter, which is not allowed on rentals, by the way, no gifts. But also we need to, you know, paper trail everything as well. So what ends up happening is, you know, you may provide 2 months of statements for, let's say, Bank of America for your down payment. But in those last 2 months, we see transfers from a Wells Fargo account, a Chase account. So at that point, we're going to need 2 months of the statements from the other account from where that deposit came into that Bank of America account in this example. So we'll reach out to you and say, hey, you know what? We saw some deposits coming in from Wells Fargo. Please send us 2 months of that account. And then what happens from there is you send us 2 months of those Wells Fargo statements, and we see, oh, well, in those 2 months, there was a deposit from E-Trade, from a stock account. So now we need 2 months of your stock account statements. And as you can see, at the end of it, we end up needing, so much paperwork. Not only do we need asset statements for all those accounts, we need to document the transfer as in paper trail everything. So what am I saying here? I've obviously discussed what most people are doing. Let's talk about what you should do in the perfect world, right? If you know you're buying real estate in, a couple months or later in the year, it's very important to make things very easy if you have a specific account that you use for real estate investments. And I'm not saying you're not allowed to transfer funds from your other accounts, the month before you're trying to get a mortgage. You can. But just know you're going to have to document all those transfers. So if you have the ability to transfer all the money from these various accounts, 2-3 months in advance of you trying to apply for the loan, by the time you come to us to get the loan and we ask for 2 months of bank statements, guess what? All we're going to see is the money in there. We're not going to see any deposits. We're not going to see any withdrawals. We're not going to have any questions. And the condition of providing bank statements, you can essentially wash your hands of because it's done. And it makes things a lot easier for everyone involved. So, it's very, very important. Once again, if you're going to buy real estate, if you're going to get a loan, if you want to make things easier on yourself, transfer money around 3 months before. That way, when you come and apply for the loan, you have a clean 2 months of asset statements. It makes things much easier for everyone involved. And then another thing to note too, in terms of those reserves, the requirements can vary depending on how many properties you have and the occupancy of that particular property. But good soft rule of thumb, you need to have roughly 4% of your unpaid balance of your mortgages in terms of reserves. So if you have, 500 grand worth of mortgages, you need to have about $10,000 in reserves. And another really cool thing is your reserve requirement can be completely satisfied by a retirement account. So if you guys have retirement accounts, you don't need any liquid for reserves. That will work in its entirety. So yeah, I think that covers it. We'll do a lot of small segments here and there, kind of mortgage tips. That way we can impart some education to you guys, but also make sure that you have a smoother experience when you're getting loans, whether it be with me or someone else. But hopefully with us, we are licensed pretty much across the country between my team and I, and we do offer primary homes, rental homes, over 10 finance properties, low to no doc loans, pretty much everything you can think of under the sun. So look forward to sharing more of that information with you guys on future webinars as well.
Yep, absolutely. Richard.advani from Supreme Lending, amazing loan broker. So Richard, you have another 15 minutes to do another module, another topic.
Perfect.
Okay, so this we can discuss, Richard and I, we can discuss people. Let's talk about financing. Let's talk about mortgages. It doesn't matter if it's a home owner occupied or investment loans. People just take it for granted. Oh, we have mortgages available to help us buy a house, but you need to realize it's not don't take it for granted. I mean, I've been doing this for a long time, Richard, and as well. Do you know in other part of the world, in other countries, to my knowledge, there are no other country that have the type of mortgage that are available that we have here in the US. So it's amazing, right? If you do not take advantage of leverage, whether you buy an owner-occupied house or rental property using financing, I mean, you're missing out. You are throwing money in the toilet by not taking action and buy rental properties using financing, because not only for overseas investors to buy a property in the US, either they have to pay by cash or they have to get a hard money loan or non-Fannie Mae qualified loan, like 50% down, whatever, right? It's very, very difficult for people from other countries to get financing to buy US properties, although they do it a lot because they have a lot of money, they buy with cash. But also, I mean, okay, I'll go back. Okay, I'm older than Richard, so I go back like in the mid 80s, in the early 80s. You know what's the interest rate on a mortgage back then? Like 15 to 18%. Think about that. And yet, people are still doing mortgages at that time. People are still buying owner-occupied homes. People are still buying rental properties with the interest rate, which is, come to think, it's just mind-boggling, right? I mean, as I reflect back in the past history, so for you guys out here today, we're going through a record low interest rate in a mind-boggling historical basis. I mean, owner occupied, you're getting less than 3%. I'm not sure. I mean, Richard would go for investor, you're getting like mid threes. This is mind-boggling. The ability for a bank or a lender to trust you, to give you a loan based on your good credit. The fact that as an investor, I mean, a lot of people does not have good credit. You and I know that. A large segment of the U.S. population can't qualify to get a loan, don't want to get a loan, too scared to buy a property, or whatever. And it's really sad and tragic. They are not, their money management skills are severely lacking because money education, financial education is severely lacking in the U.S. for years and years, for decades. So, we work with investors that many of you on the verge of pulling the trigger, buying rental property with a mortgage, and yet many of you still won't do it, can't do it, even though you qualify. So think about this. I mean, this opportunity, this window to get leveraging, when you have good credit, the lender already trusts you. They're willing to give you 75, 80, 85% leverage. They're risking their loan, their money. You're only risking 15, 20, 25% of the asset that you're buying. I mean, this is mortgage these days is like, hate to say this, like a free money. The banks are almost giving you free money to leverage your wealth through rental property purchase. Think about this. This is mind-boggling for those of you that have the ability to use the amazing financing available to you to leverage your wealth, and do not do it. Shame on you. So, Richard, okay, I'm very blunt because I've been around a lot longer than Richard, right? And I purchased my first home back 30 years ago in Bay Area. I purchased two principal homes in 30 and 25 years ago. My homes are quadruple over the years. And anyway, so all right, Richard, you as a lender, I mean, what type of motivational speech you need to impart and instill into people right now to get them off the rocking chair and pull the trigger before they will lose out? Good, Richard.
Yeah, I mean, it's so competitive out there right now. I think what I'd say is don't go buy any properties. Save more for me and for SeeWing and everyone else. No, I'm kidding, but it's crazy out there right now, and with how competitive it is, and that's because most people realize that the real estate market is far not only from correcting. There's still so much demand and such little supply that it's not going to get any better than it is. Prices are going to continue to go up. I think I was hearing on CNBC, and I know you mentioned an article as well as SeeWing, where there's, I think, the need for 5 million homes in this country right now, and I think they're only building 1 million in the next year. So, yeah, I mean, look at simple economics, everyone. Supply and demand, right? There's not a lot of supply and a huge demand, and for the foreseeable future, that's not going to change, which means that prices are going to stay, where they are, and they are likely going to keep going up. And then rents are going to follow as well. I was reading another article talking about rent inflation and how, although rents have gone up a lot in the last year, the home prices have gone up a lot more as well, and rents already had some laggard to catch up on. So, rents are projected to go up as well. And then factor in, the fact that, yes, okay, house prices are a lot higher than they were. Doesn't mean they're too high. Doesn't mean they're going down, but they're a lot higher than they were a year, 2 years, 3 years ago. But the interest rates are the lowest they've ever been by miles. And most people are realizing that makes up for the prices being high right now. I mean, we have a rare opportunity where inflation's going up dramatically. Rates are super low. I mean, who knows what the real inflation rate is right now, but my hunch is it's very close to what the interest rates we're paying at on these rental properties, which means you're getting free money. And, the cost of bread's going to go up. The cost of rent's going to go up. The cost of, a cheap economy car these days is what, 25, 30 grand? Used to be able to buy a car for 14 grand. And 10 years from now, the same thing's going to happen. Everything's going to be way more expensive today because of inflation. And that's not my opinion or my thoughts. That's how the world works, right? Inflation is 2 to 3% every year. 10 years later, something you bought today is going to be 30% more expensive, right? So you're going to have a fixed 30-year mortgage, 10 years, 15 years, 20 years from now, when things have gone up 60% higher. And guess what? Rents are going to be dramatically higher as well. And that's how you build wealth. Like, real estate's not going to make you get rich in 2 or 3 years. Now, maybe you bought a high cash flowing property 2 or 3 years ago and it did make you rich, but that's not how we recommend you invest, just based on that, right? You invest long term. Yes, we've all done very well in the short term as well, but you can easily, not investing on the right fundamentals, get caught with your pants down. If you're just investing purely on, I still have people buy properties in California losing $1,500 a month because they want to invest for the appreciation. But obviously, you invest long term. You take advantage of the low interest rates. You take advantage of inflation. You take advantage of the fact that 7 years, 10 years, 12 years in, you start paying so much more principal on that loan and building wealth on the back end. You are going to do well in real estate. And you do need to look at it as a long-term investment, and sitting on the sideline is not going to get you anything.
Yeah, Richard, let me say this. Okay. Real estate is amazing. It's a multi-dimensional asset. You know why? Because your tenant is going to pay off all your obligations, your mortgage, your taxes, your insurance, your property management fee, the 5 or 10% maintenance factor you have to pay, and then and all the vacancies, the rent you're collecting, your tenant is going to make you rich. And there are plenty of tenants out there. So there's no other asset class. There's no other investments in the history of the world that where, once you put 15, 20, 25% down payment to buy a rental property, you can recoup your down payment money maybe in the first year because of the appreciation of the property, maybe at 10%, right? And if the appreciation is not 10%, maybe 5%, you can recoup the down payment in about 2 or 3 years. And then beyond that, it's almost like it's an automatic a thing for years to come, because beyond that, all the cash flow, all the appreciation beyond the money you put in for the down payment are like free. It's such a powerful asset. Think about it, right? Your tenant, your high quality tenant is this is mind-boggling. And it just is amazing to think about it, right? How could someone gonna make you rich? You have tenant paying down, assuming you buy a cash flow property, of course, right? In a good market and so forth, and you use the right team. But this is amazing. You need to really sit down, just analyze, the power. Tenant paying down is making you rich. It is that simple if you break it down. So again, I think we're concluding our presentation. So Richard, one final word, you have anything to add about what I just said?
Yeah, I was actually looking down because the Treasury 10-year treasury yield, which mortgage rates are loosely based off of, is up like 6% today. So about the highest, that it's been in the last year or two. And by tomorrow, our mortgage rates are going to go up a little bit as well. And the general projections are going to stay pretty low throughout the end of the year. But even if they go up 0.25% to 0.5%, that's still pretty low historically, and even versus a month or two ago, excuse me, a year or two ago. So, yeah, I mean, as we're sitting here, the reasons for waiting are getting smaller and smaller, right? It costs you money to sit on the sidelines. And, if you haven't started anything yet, you better get started, because right now you're getting investor loans in the mid to high threes. If it goes to the mid to high fours a year from now, that's going to cost you a lot of cash flow and a lot of wealth. And, you're definitely going to regret it. So let's take advantage of these low rates while we can.
Absolutely. With that in mind, I think that's pretty much it. We're running out of time. Once again, thank you very much, Mr. Richard.advani, from Supreme Lending, an awesome loan broker, loan consultant, real estate loan advisor. Thank you so much for attending, and we'll see you next time on another topic on another podcast. Thank you so much to the SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye.